If you want to open a business in the form of a limited liability company, or if you already have such a company, you will almost inevitably meet with the concept of holding company. In today's episode, we will discuss what advantages a holding company can have for you.
Welcome to the Business Lessons in Denmark podcast. Our podcast gives the answers to your business-related questions that have not been answered yet or things that haven't even crossed your mind. My name is Adina Bohos and I am here with my colleague Katalin Balog. We are owners of Cool Accounts APS, a Danish accounting office. Hi Kati, I was really looking forward to today's show. Last time you said that if I have a limited liability company, which in Denmark is a company form called APS, then the question of opening a holding usually comes up. But what exactly is a holding? Is this a new form of company?
No, it's not a form of company, but rather a special kind of company. In last week's episode, we took the example that you had an APS, and this APS was operating a Hungarian restaurant. Many times when you have an APS, it either delivers some services or produces a product or products. But a holding company is a kind of company that doesn't do that. The only function of it is to hold money, to contain money and invest it. So it's basically, it's a money container.
Yeah. Okay, I see. And what does the holding company invest the money in? In securities, in real estate?
Yeah, perhaps, but more typically into other companies. So a holding company would be beneficial for you if a holding company would own your APS that is operating the restaurant.
I see. Should this be understood as a kind of company structure where the holding company is at the top and the APS operating the restaurant is below it? That is, the holding company is the owner of the APS that operates the restaurant. So could we say that the holding company is the parent company and the APS operating the restaurant is the subsidiary company?
Yeah, exactly. This is the simplest setup, but a parent company can have many subsidiaries under it.
Interesting. And then why is it good for me to have a holding company?
For several reasons. The first is for protecting your money. As I said, the holding company is can be considered a money container, and the money comes basically from the APS, from the restaurant. So the restaurant is generating some money, which you move up into the holding company.
Okay, so the restaurant earns the money, but I don't leave this money here in the restaurant, but move it up into the holding company. And how can I do that?
By paying dividends to the owner, which is the holding. So you just make sure you always have enough money left in the restaurant for the operation, so it can operate. But otherwise, every year, when you have some profit, you move it up into the holding company. And this is a good idea because right now, everything is fine. The restaurant is going well, right?
Yeah.
But we never know what happens. It can happen that a hamburger joint opens next door, and then you lose all your customers or most of your customers, and suddenly you don't have much income, but you have a lot of expenses still. And then maybe you start to generate a loss and maybe you go bankrupt. Now, your creditors can only get to that money that is in the restaurant, that is in the APS. They cannot get to the money that is in the holding because the holding is a completely different company. it's a completely different legal unit. So, yeah, I mean, obviously, I don't want to encourage anybody to not pay the creditors. This is not that, but anyway, it is good to be careful and to think about the future.
Yes, because many things can happen in life, also unexpected things and things that are not very helpful to my business.
Exactly. And if the worst happens, then it is a really good thing that you have saved up a reserve in a separate company while you had the good years.
Yeah. Yeah, that is definitely something to consider. So you said there were several advantages to holding, but what else is there?
Yeah, the second big advantage is related to taxation.
Continue, please.
Yeah. So in our last episode, we talked about that when you, as the owner, take dividends from your company, then you have to pay dividend tax. And if the dividend is a large amount, then the dividend tax is actually 42%.
Yeah, I remember that under a certain amount, the dividend tax can be 27.
It is 27, yeah.
27, and above it is 42.
Yeah, exactly.
Yeah.
So now the dividend tax does only apply if it is paid, the dividend is paid to you as an individual. If the dividend is paid to a holding, then the holding doesn't have to pay dividend tax.
Really? Nothing at all?
Nothing at all.
Wow.
Obviously, if later you want to take out dividend from your holding, then you will have to pay dividend tax.
Hmm.
But as long as the money is in the holding, then there is no tax.
No tax. This sounds interesting. So, but I can see that there is more to the story.
Yeah, there is more. Because right now you have the Hungarian restaurant, but as I know you, you are a smart businesswoman. So maybe you have already been thinking about what to do with the profit that you get from the restaurant, right? If the restaurant generates you profit, so maybe you could think, or maybe you would think to invest that money into something.
Yeah, actually, it's true because I have already started looking at a cute little guest house for sale. It's quite small and it should be renovated, but it's in a very good location and it would be absolutely fantastic.
You see, I thought so. So, if you want to invest into that guest house as an individual, then you can only do that with taxed money, with money that is already taxed. Because if the restaurant made you 1 million crowns, then you first pay the corporate tax, which is 22%. So then the remaining money is 780,000 crowns, right?
Yeah.
And when you take it out as a dividend, you will get around 460,000 crowns after paying the dividend tax. So this is what you have to invest into the guest house.
But really, only that much is left from the 1 million?
Yeah, exactly. But here comes the good news. If the restaurant is owned by a holding company, then there is no dividend tax, right? So you earned 1 million in the restaurant, you pay the corporate tax 22%, and you have 780,000 crowns left. You give it to the holding, you pay to the holding as dividends.
Yeah.
But because the holding doesn't have to pay dividend tax, you have that amount left to invest into the guest house.
Wow, but it's almost a double. So things are starting to get exciting.
Yeah, exactly. But that's not all. Because if you have this holding structure, like the holding and the restaurant and the guest house, there is a possibility that the structure pays corporate tax together as one unit. And it can be advantageous because let's just assume that your restaurant in the next year is still generating profit, right? It generates again 1 million crowns as profit. But the guest house is completely new, guests are not coming yet because they don't know about your guest house. You have a lot of renovation expenses, utilities, and so on. So you actually have a loss in the guest house, okay?
Yeah.
Let's say you lose 500,000 crowns on the guest house.
Mm-hmm.
Now, if you didn't have the holding, but you had as an individual these two companies, then you should pay 22% corporate tax on the 1 million, right?
Yeah.
So that is 220,000 crowns in taxes.
Mm-hmm.
You don't have to pay anything in the guest house because that had a loss.
Yeah.
Right? Now, if you have a holding company, then these three companies are taxed together. Okay?
Mm-hmm.
And let's say the holding didn't have any profits or any loss. You have 1 million profit in the restaurant. You have 500,000 crowns loss in the guest house.
Mm-hmm.
So
it means I have to pay tax only on 500,000 crowns.
Exactly. Because you can minus the 500,000 loss in the guest house from the 1 million in the...
Okay.
And
very good.
Yeah, and if you calculate 22% corporate tax on the 500,000, it's only 110,000 crowns.
Wow. Okay, it sounds very good.
Yeah, much less, right?
Yes, exactly. Yeah, it's a big difference between 220,000 and 110,000.
Yes.
Wow. Okay. Yes, and I like this idea more and more to have a holding company system. So, what other advantages can be?
There are also other advantages. For example, if you have more owners, let's say you have this restaurant, but you are not only yourself who is the owner, but maybe you have a friend or somebody else. So there could be an advantage there, but it's a little bit of a longer story. So I don't think that we'll have time for that today.
Yeah, unfortunately not, because soon we run out of time. So if you are interested in more details, just book an appointment for a personal or online consultation.
Right. Well, of course, there are also some disadvantages to the holding company, but not many. Basically, the disadvantage is that it costs some money to you to establish and to maintain it. Like you have to have a bank account and insurance and accounting, financial report. And so your life will be a little bit complicated. But of course, if it is like a lot of money, that, like if you make a lot of money in your company, then it can be good anyway. So yeah, the more money we are talking about, the more reasons support the holding company, I think.
Yeah. Okay, so I really like this setup with the holding company. I can see that it can be really useful. So thank you very much, Kati, for a lot of useful information. And see you again next week. Today's episode was sponsored by Kulakon CPS. Kulakon CPS can help with starting your company with bookkeeping and tax matters. In addition, we also provide business and financial consulting. If you like the show, then follow us and like our Facebook page. If you would like to contact us, you can do so via our website, www.accounts.cool. We wish you a successful week.